Buenos dias, ohayo, konbanwa, bonjour. Buenos dias, muchachos. Welcome to the daily stream here at BitLab Academy. My name is Kellam, and welcome to the show. We've got some great things lined up for today. Every day, we're breaking down what's going on in the market, and rather than just spoon-feeding you today, we like to break down some of the basics of what is actually happening, what's going on in the price action and why, and how we can utilize the different tools at our disposal, understand the concepts that are in place, and how we can use that to our advantage so we can navigate these markets. Hit that like button, hit that subscribe button, ding that bell if you have not yet. Get involved with our community. Let YouTube know that you like this sort of crypto content. It helps drive the content forward. So throw a 1 in chat, or throw your favorite emoji in chat if the audio and visual is good. Throw a bull in chat if you're bullish. Throw a clown in chat. Not a clown. Throw a scary emoji in chat if you're scared right now. Let me know what you're thinking, what you're feeling, and have you dove in? Or here's a YouTube page. If you're watching anywhere else, come and check us out over here at youtube.com/@BitLab Academy. This is the page. We're pushing up right about 6,370 followers. Hit that subscribe button if you have not yet. Join our community. And make sure you come over here and check out the playlists over here, the Daily Alpha. There's a lot of great stuff in here. I highly recommend everybody, if you have not yet, watch this Pro Trading View guide. Also, this Bitcoin and banks. Bitcoin, yes, banks cracking. Not cracking like the exchange, but they're sort of faltering here. And this is what Bitcoin was made for. So come and watch some of these, any of these videos. These are all evergreen videos meant to be watched anytime. But with that being said, I said that I was not going to say that anymore, but come over here, give me a follow here at Kellam, Kelly, Kellam. Make sure you're following the one and only profile of mine on here. I don't ask you about crypto. I don't message you. I don't reach out, offer you any groups or anything like that. I only share content here on here for everybody. So make sure you're not getting trapped in by any of those fake accounts that are out there. And as we're getting started, make sure that you come over here to the BitLab Academy page. You've got to like this page and retweet this daily tweet. Retweet this tweet right here. Whether you're watching this live or you're watching this later on this afternoon or any point, you can retweet these. We do drawings each week to give away free access to the courses, free access to the indicators. And I might be doing a special little giveaway this week too. We did have our 100th video, I think it was a couple days ago. So on the note that we've had over 100 videos go out, the daily streams, I wanted to give $100 out. So I'm going to post a poll here in chat. Do you think that it is better? You can just comment. Do you think it's better I give one person $100, 2 people $50, or 4 people $25? And it could be either in stablecoin. I think it might just be stablecoin. I think it's just going to be stablecoin to make it easy, and you all can transfer that to another coin if you like. But we're going to be doing that drawing tomorrow as well, and it's only going to be for somebody that's in chat, and we're going to be doing that drawing, the $100 giveaway, at the beginning of the stream tomorrow. So make sure you're tuned in live tomorrow. I want to give a little a special thanks and appreciation to those that show up early. Now, we got a lot to talk about today. The market's crashing. Oh, is it really crashing though? A small pullback, a healthy pullback, if you will. I think this is still well in line with everything we've talked about. And we're going to be breaking down a lot of stuff today, from the unemployment data to the rainbow chart to what's going on with the US dollar, Tesla, not only Tesla, but a lot. Tesla's getting price cuts, but there's also one of the largest liquidations for longs happened yesterday. What does this mean? We also see that we've got the EU Parliament votes to regulate crypto. Why is the US so far behind and be able to get stuff done? Well, we're going to talk about that and what this means. Is this lending to a little bit of the pullback in price action on Bitcoin? We can also see that is Coinbase basically moving out. They already filed for the license to open a derivatives exchange in the Bermuda. Or Bahamas, I mean, not Bermuda. Also, we can see that there's some global liquidity still coming in. We're at some key levels. So is this pullback really a crash, or are we at just, look at this, Are we at just a key support? Is this something larger brewing? We've got some charts we're going to be breaking down, as well as make sure you come over to BitLab Academy if you have not yet. I'm emphasizing and encouraging all of you, get involved with BitLab now. Go and join today, or the next few days, because I am in Atlanta right now. And the sole reason I am here, one, is because I love you all. And I love my community here at the Hit Network, the BitBoy Crypto crew, Frankie Candles, everybody. Now they're all the way on the cruise. I'm here working hard for you guys. I'm not saying they're not, but I'm here specifically because we need to get the new BitLab launched. And I want to say the prices are going up for BitLab Academy. And with BitLab Academy, you get access to this huge Discord we have with all kind of content in there. So many new courses, from trading fundamentals, technical analysis, candles, candle patterns, psychology of trading. What else is there? Trading strategies, on-chain data analysis, self-custody. There's like 3 or 4x already from what we currently have in BitLab Academy that's coming to BitLab Academy. All brand new content, all video content. So we are going to be raising the prices, but everybody that is a member before those prices go up gets to keep the lower prices. And you can even get a bigger discount off your first month if you use the code BitLab15 at checkout. Just once you add it to cart, go put in your information and go down to the right above payments. There's a have a coupon. Click on have a coupon, put in BitLab15, press apply, and you're going to get 15% off your first month. And you're also going to be able to lock in the prices. Now, there's all the old content that's in there now. When you see this new website, bam, right here. When you see this new website, that's when you know that the new content is live. And we have, like I said, indicators, candle patterns, trading fundamentals, psychology of trading, and all of these are video courses with quizzes. With I'm teaching most of them. Frankie Candles is in quite a few. AJ Pleasanton's in some. Ben jumped in for some stuff there. Also TJ here from the BitBoy channel. Doing blockchain 101. We're going to have a bunch of free content as well as a bunch of paid content. Now, I really want to encourage everybody, come over here, sign up for this newsletter as well, because you're going to be entered to win. That's another access to win free month access to courses and indicators. And I have not sent out anything on this yet because we've been on this edge of launching, and I want this next newsletter to be when we're announcing what the launch date is, as well as, some information around that. But we also put out, once the launch goes live, I'm going to start with the weekly newsletters again. And we do charts and setups, weekly alpha, discounts, gives early access to stuff. So come over here, sign up for the newsletter. Now, everybody in chat, how are you doing? How are you feeling? I'm going to scroll back here. I'm going to see who's in the chat. I think it was Crimson Caravan Company who was the first one in the chat. Learning was number 2. Alexandra G, how you doing? Wonderful mod that we have here. She's always helping out. I just want a special shout out for Alexandra G. Alex Green, who's on staff, he's one of the mods in here as well, has been working tirelessly to help us pull all the final stuff together, because it's not just filming this content. For those of you that don't realize, it's not just filming the content. Why people ask why it's taking so long to launch. I mean, we had to write all new content that's updated with current stuff, with current knowledge that we have of what's going on in markets, technical analysis, all the stuff. I don't want to go through the courses again, but it's also the website, the content, the integrating the membership database, rolling that over. There's just been so much. So I don't want to do a long intro. I've already been talking for a few minutes, so let's go ahead and dive in to what we're talking about. How's everybody feeling? Alex Green, just want to shout you out again. King Peasant. Who else we got here? Mike Volmer, unforgettable name. Why are you not a mod? Because you're also helping out with some of the stuff. And I just want to encourage you along with, we got a crypto wiki that's a part of the BitLab as well. So you can, if there's terms or concepts you're not sure about, unforgettable names also helping us finish that up. We had a number of people contribute to that as well. How do I make you a mod? Make a mod. Boom. Add as moderator. There we go. Standard moderator. Bam. Now, who else we got in here? We got a lot of people. Blazing TJs, Crypto 420. Shout out to Brokoshi No Dinero. First off, excellent name. Second off, I got to meet you yesterday here at the Hit Network Studios. Crimson Caravan Company, how you doing? Brad Guydell, of course, wonderful to see your name in here. Zuni Zaniga, what's up? Tenacious B, John Cree. We're rocking and rolling today. We got all kind of people in here early, so let me go ahead and make sure this is all working good. Okay, we got 93 people in here, 45 likes. Hit that like button, hit that subscribe button. Ding that bell. What are you doing if you haven't done that yet? You're not contributing back for us providing you this free content. Let us know you like what's going on. Now, what is going on today in the charts? What's going on with the price action? Well, we can see the U.S. dollar is looking like it's broke down, was making an attempt back up, but looks like we got rejected right in this regional support. Resistance, previous support, kind of confirming this breakdown. We kind of tricked us out, faked us out a little bit, came back up, but now we're consolidating here. So the key is going to be one of the keys in the market in terms of where risk is in the market. This is what we want to pay attention to. Where is the psychology of risk? This is what we want to know. When we are trading, I want you all to remember this always. When we are trading in the market, for you to buy, somebody else has to sell. For you to sell, somebody else has to buy. What we're watching when we're looking at these markets, I don't care if it's the NASDAQ index, the Dow Jones index, the S&P 500 index, the dollar, Bitcoin, Cardano, XR, any of these price action charts is a demonstration of where the psychology is for that asset or that asset class at any given time. So what does that mean? If we're seeing a trend that's coming down, even with the small uptick right here, if we're seeing a trend down, in this case, we're looking at the 4-hour, then on the 4-hour time frame, the market psychology is that the bears are dominating this narrative. Bulls are trying to make an attempt, but they lose the momentum because the bears dominate. The bulls don't have enough conviction to take this higher. There's some conviction because, as we can see, this is Cardano. As we can see this attempt to the upside, we have basically this candle tries to reverse back up. We get a strong push up. Let's zoom in on this a little bit. We get a strong push up. And why do I say a strong push up? Because the candle opens right where this, right where the bottom of this candle body is. The candle opens here, pushes all the way up to here within this 4-hour time frame. You can see this. Why do I say this? Let's zoom in a little closer. Because what we're seeing is this wick. What do I mean by wick? This small little green line that goes up. This means during this 4-hour period, this candle body, this candle, the price action, the bulls tried to take it all the way up to here, and they didn't have conviction. How do I know they didn't have conviction? Because somebody started this cascading of profit taking, and people were taking profit here, and bears were buying this up and bringing the price back down. So this is showing weakness of the bulls, and the bears bring it back down. The bulls try to make another attempt, and they even get pushed all the way down to here, but ends up green. But we're seeing this roundingness. The bulls are losing momentum, and they didn't even make it to a previous high. So these small things, I just want to reemphasize this. As much as you think you may know this, we have to go over the fundamentals regularly, because it's understanding these most basic concepts within the market of just a candlestick and multiple candles, even 3 candlesticks in a row, will give you an idea of what the narrative is going to be coming, what's coming in the market. In this case, we could see that the bears are trying. They kind of lose conviction. The bulls take over. There's a little bit of an uptick. The bulls don't have the strength to continue higher. So what happens if the bulls don't have the strength to continue higher? They start to change their narrative as well, so they can take advantage of the price action coming downside. So smart money does that first. Smart money, a lot of times, also institutions and smart money will even manipulate the market to have this price action, to get retail, to get those of us. All of us have done this. We lean into our emotions and we become held hostage by our emotions. And this is what they're trying to do. And because this wick that went all the way up here, let's zoom in on this further. This wick, you could see, where's my candle? Where's my arrow? This wick right here. We see this wick? This wick is essentially the price action being pushed up and somebody not wanting to miss the move. Their emotion said, oh, it's starting to, I got to get this before it breaks out. I'm going to front run it. Well, then they buy at the top of this wick only to have it come down. And that's the number one thing I want to prevent all of you from doing. You don't buy the excitement. You buy the fear. You don't sell the fear You sell the hope. Now, as cutthroat as that sounds, for you to make it in this market, you need to look at this market like a data point and hope that everybody else, every one of your friends, help everybody that you personally know, hope that they have the skills necessary to trade this market effectively. But you need to trade this market as a one-man show, meaning that you need to look at the data in this and do what's best for your portfolio. Even the information, even the skills, the strategy, the concepts I talk about here, this can only be one data point for you. You need to listen to other people, because none of what I give is financial advice here. What I give is a breakdown of what I have learned in the markets, being in the markets for years, and how we can dominate what's going on in the market rather than the market dominating us, okay? I don't want you to be dominated. I want you to dominate this market. Now, in order to do that, you've got to look at even the simplest things like candlestick patterns and understand that with these candlestick patterns, individual candlesticks, and then you get three bar candlesticks, and then you get larger formations. You know, if we come down here on the daily, we can see that we are in this larger rising channel. So putting these things from the fundamentals all the way up to the more advanced strategies, if you don't start with the fundamentals, the strategies aren't going to make sense and you're going to be eaten alive. So the reason I'm starting with this fundamental sort of talking point today is because in order to understand, I'm going to back this out. In order to understand, coming here to Bitcoin, let's go over here to the 3-day chart. In order to understand what the heck is happening and how we can best navigate what's happening in this market, we need to understand those basic fundamentals. Now, I'm going to go ahead. Now, everybody that's in here, you are all in here early. So hit that like button, hit that subscribe button, ding that bell, get this out early. Come over here to my Twitter. Follow me here again. Come over here. Follow BitLab Academy, which is at BitLab Academy. Retweet this tweet so you're entered to win, whether it's going to be multi-month access. Sometimes we do lifetime giveaways, lifetime access to the courses and the indicators. Just get this tweeted out and like BitLab Academy. You have to do both. You have to like BitLab and do the retweet in order to be eligible to win that random drawing we're doing tomorrow. But in order to really take advantage of this, I want to first shout out again everybody that's here early. So start throwing in the channel right now in the chat. Let me know some of the coins you're interested in looking at TA, which we'll be doing towards we'll kind of intersperse in the middle, and then at the end, of course, we're going to do Bitcoin. But let me know the other major altcoins, mid alts, and maybe a couple of micro caps. The mods are going to send me a DM on Discord, on the private Discord we have, to let me know what the general consensus is of what y'all are looking at, what you want to see, and we're going to make sure we can figure out how we can identify targets from here. This is all about looking at the market today and figuring out what we do now. Now, looking at the market today, we're looking at Bitcoin. We could see, okay, by the way, I do want to shout out to my man, Nick, who is, he's on our, he's part of our team here, works very closely with me to build out these indicators. We've been working in the back end on doing some really great updates to the BitLab trading stack, which, as you can see here, this is a market intelligence, the hidden volume, relative extreme and significant movement. All of these are an aggregate and algorithmic sort of reading of probably between all three of these four of these indicators. There's probably about 20 to 22 other indicators that we are reading and data points as well. Excuse me, data points as well to give us really strong, very accurate, highly detailed data points for us to make very highly probabilistic calls so we can trade smart. Basically, think of it, we're using an engineer, Nick, that has worked with multi-$100 million high-frequency trading hedge funds. So it's the data points that smart, very smart, the smartest money uses. We use all those data points in combination with those data points that we want to see as active crypto traders, using divergences as well as momentum and velocity and volume and strength and the health of an actual individual candle. So there's so much that goes into these indicators. Now we can see here, the point with all this is look at this move from here all the way up to the top there. about a 90% move. Now let's go ahead and zoom in on this. People are worried right now with this currently down 5%, a little over 5%. What is this fear from? If you're feeling fearful, that's a good indication that you're being held hostage by your emotions. If you're being held hostage by your emotions, then I highly recommend, this will be a recommendation I can give. I recommend that you do not trade if you are still unable to navigate the emotions that are hijacking your ability to make good decisions. Now, will emotions come into the picture throughout all of your trading? Yes. It's your ability to navigate back to being on path of data and strategy and an action plan. Then, you know, say you bought here and you rode all the way up to here and you thought about taking profits, but then your greed took hold of you. You say, well, I'm not going to get out now. It's about to go to 34. And then it starts dropping and you sell, and it hadn't, you know, it's one thing if you bought here and you moved your stop loss up to this level and you got stopped out. That would have been an okay trade. But if you sell because you're fearful here and you bought somewhere about the same level, that's not part of your strategy. What would be part of your strategy is buying, maybe say you bought this breakout. If we zoom in on this part right here, we'll put a line here, option V. Why? Oh, you know what? It's because I have my lines off. Okay, so let's go. That's our line. Let's come down to the 4-hour chart and see where that is. So that would have been right here, this pattern right here. Say you bought this breakout right here, okay? So you have a bull flag or a bull pennant, a bit of both, a bull flag, and you bought this breakout. If you have your stop loss somewhere in this region, or say you bought, say you didn't buy this breakout, but you bought when this broke this previous high, a more conservative play. And then this was frustrating because this is just consolidating sideways. Now I'm going to turn off all these indicators. This is consolidating sideways, but we do see that we formed a bit of a almost a symmetrical triangle, almost a symmetrical triangle, almost an ascending triangle. The difference would be symmetrical triangle. This is falling and this is rising. If we zoom really far, yeah, it is more of a symmetrical triangle. So we'll just leave it at that. So say you bought the breakout above this level and then this continues higher here and you have a stop loss somewhere in this region. So if you bought at this level, 26,000, and you had a stop loss, you know, maybe just below this, this trend line right here, then when the price action is all the way up here and you thought about taking profits, but you didn't because you didn't have your target set for your take profits, which you should always have when you take a trade, and the price starts to reverse, there's one thing, if you moved your stop loss up to, you see this trend line right here moving all the way up here, putting your stop loss up in this region, maybe in confluence with this high volume node, just below this trend line in case the wick goes down there, then currently right now, you would still be in profit from this level and you have an action plan. If this does continue to go to the downside, then you have a stop loss in this region because you have this ascending trend line right here. This is still holding above it. You have a high volume node just below that. So what we would do in this region is had you moved your stop loss up, which is always a good plan, and you put it, you know, in this region right here, then you may have been stopped out on this wick. You may not have. But the point is you don't sell because you didn't have a plan and you're fearful because this dropped. You move your stop loss and you take advantage of this. Now, one of the things I can say is if the price action broke above this level or you bought this breakout of this bull flag here, I'm going to double click on this, minimize those other indicators. Then what we could have done is on this area over here, if you didn't take profits and you're watching the price action pull back and you see this form right here, you see this form a lower high and this price action breaks down, your stop loss could have been put also just below these candle bodies, not the wick, just below these candle bodies right there. And you could have taken a portion of your profit or all of it, depending on what your strategy is, right as this breaks below this lower low, because then at this point, you are confirming that you also have this lower high, which indicates price action may be continuing to the downside. Now, this is on the 4-hour chart. So we're going to come back to this. We're going to talk about where I think price action is going, but I want to ask you all, I'm going to go ahead and end this poll. Have you retweeted Have you retweeted this yet? We got 35 retweets. We got 149 people in the room. Come over to the BitLab Academy page, which is at Academy BitLab. Retweet this, like the BitLab Academy Twitter. You're going to be entered to win some stuff. We're drawing tomorrow. And also, if you have not hit that like button, hit that subscribe button, and ding that bell yet. I don't know what you're doing, giving you free content here, but we're going to be talking about what's going on in these markets now. But I want to ask you all in the chat. I'm going to end the poll. Do you think the market is? Do you think this is? I'm going to do the poll right now. Do you think that this market is this bear trap and going higher in next few days? Do you think this is going higher the next few days? Meaning breaking past the previous high that we just had? Or do you think that this is a continuation move and will at least and will test 25K and test 25K, and that means it could also potentially go below 25K, but do you think it's going to at least test 25K? There's a spelling error in that, but that's okay. Now let's see. I also asked this question on my Twitter yesterday, which is right here. And this is, where is that tweet at? It's right here. Let's see. So 55% think that this could be a short squeeze brewing. 44%. This is from yesterday. 315 votes. 25 down to test 25K. Let's see what our audience here thinks. Now this is important because the reason why I bring this up is because this could have huge impact on what price action does because of what we're talking about. And we talked about this the other day with MDX Crypto on the channel. If you did not watch that stream, you should definitely go and watch that stream. That was this stream right here. If we look, which one was it? Come over here to videos on the BitLab Academy page. This strategy, the Crypto Millionaire strategy with MDX, he really broke down. He had a bit of colorful language. I apologize about that, but we're not going to censor anybody on this channel. I let him know it was a family show, but sometimes things just get passionate, and I apologize about that. But that's just, this is we're talking about a revolution right now. But the point here is we need to look at this data right. Where is it? Let's see. This data right here. Yesterday was the biggest long liquidation event in crypto this year. Why is this important? Well, essentially what happens is we get too many people betting leveraged positions, derivatives, options, all these things. Too many people betting long, and the market makers can see that. Smart money can see that. Institutions can see that. And if there's a lot of people going long, then that means that when we come back over here to the Bitcoin chart, if a lot of people are going long, once we're getting in these regions, especially some people up here and then in this zone right here, then we can see that let's say there's a lot of people not using a healthy risk management, and they're trading 15x leverage or 20x leverage long. Then that means let's say they're trading in this region right here. If we move down from this region, 1% is a 20% loss on that move. Okay. This is as far as they need to push it for somebody to lose 20% of their investment. Okay. Liquidations, when people are going 35x long, 50x long, even 10x long, all this stuff, you can see it in the order books, and you can see how much liquidity is in. And one of the things I'm going to do is I'm going to get, I used to have a membership to one of the order book flow charts where you could see the order books and see where there's liquidation levels of both above and below the price action. And so smart money sees that. And when there's a lot of leveraged longs with a lot of basically short liquidation points that are, between 0.5%, 1% and 1.5% down, that means all they have to do is they can coordinate and push price down and get a very small move down to then let the market cleanse itself by triggering those liquidations. Because if somebody is 20x long, and that means once it gets down to their liquidation point, they have to say they have a $20,000 position or $150,000 position. Then if they're 20x long, meaning, so if it's 100, let's say it's $120,000 position, they're 20x long, then that could be, you know, anywhere from $15,000 to $22,000 of their own capital that they're using. But when they close their position, they have to essentially buy that same position short to close the entire. They have to close that entire position by selling that amount. So by pushing the price action to these levels, they can start a cascading short liquidation, long liquidation, which is closing those long position, which is why we're getting this very fast cascade, okay? Because you're getting these long liquidations. And then you have all these people going short. These are emotional traders, not trading with sense, not trading with strategy. Throw a one in chat if you've ever traded emotionally, made a stupid decision, and lost more money than you were willing to really want to admit to yourself in that moment. Sometimes it could be $1,000. Sometimes, in my case, when I did it, I'd lost about $70,000 in the matter of about 15 minutes. And, you know, I made a bad trade, and then I tried to, as CryptoFace calls it, a kamikaze trade. Then I tried to, you know, it's like you're at a poker table, you double down. Okay, I got liquidated, but I know it's going to go that direction. So then you add more. And it's just, these things are what market makers and smart money, institutional money is counting on. Look at this. They push the price action down, force long liquidations. Price action moves to the downside. Commit people to going short. Now people commit to going short, and the price action rockets. They push it past people's shorts, the short liquidations, and then you get a short squeeze, pushes higher, and then if you're wondering if you are ever emotional, you can use the basic strategy of just candles alone as one of your core tools. We can see this just on candle patterns alone. This basically broke to this consolidation level, was not even able to form a new high. So we were forming a new low here, right? A lower high, I should say, a lower high here, which is a pivot in momentum. And we have a push up, bears pull it back down, bulls try to attempt another high. So if you were not sure at this point, maybe it was just a little consolidation, then higher. At this point, once you broke below this candle right here, when this pushed up, if you took a long here and you did not take profits here, when this broke down and you get this hammer candle right here, which is a reversal pattern, and then you think maybe this is going to break higher, and you did not take any profits at this level, which I don't know why you wouldn't on a golden pocket from this move to this low, golden pocket, clear opportunity to take profits, but you didn't. Sometimes it happens. Okay. Price moves down. When this pushes back up, comes back, gives you another opportunity to take profit here in the golden pocket. Also, previous consolidation doesn't mean you need to close the whole position, but you take some profits off the table. At minimum, your initial investment. You can just let the profits ride at this point. But if even at this point you took no profits if you took a long here, especially if you took a leverage long, you took a long at this position. We're at golden pocket. We broke down. We push up. Now look at this. We have another lower high. For me, I would have closed probably half my position just because of boom and then boom right here. Now the conservative side, but then still you're still very bullish. You think it's going to go higher. The second this candle closes below this candle close, I would have closed this position. And then boom, then you on this long, you close this position. Opportunity also at this point to go short, because now we have established we have a lower high on the smaller time frame. So this is let's call this a midterm. This is the sort of midterm time frame, and then the very local time frame, very small time frame right here, just between these about 18 hours right here. Then you have another lower high that gave you an opportunity also, if you wanted to scalp short, boom, a second this closed below this candle right here on the conservative side, you could have taken a short here. The second this candle closed below here. Now let's get on this on a little more resolution. Let's go to the 1 hour chart. Now we can see it playing out. On the 4 hour, we knew we had a lower high, but then right here, this right here, this lower high, the second this candle breaks below, the second this candle would have broken below this candle right here, would have been a scalp short position. And you could see this would have taken you down to the target would have been very clear. We have these two lines of previous resistance and previous support. Why do I say that? Let's go ahead and zoom out. Previous resistance, previous support. These are those two lines. We could see right there. See this symmetrical triangle or bull pennant, whatever you want to call it. From this level, coming back to the 1 hour. From this level, this would have been the short right as this candle broke this candle body level, because we've already established that the momentum has shifted. So the short from this level right here would have been, and the profit taking, the target would have been at one of these lines and then the next line. So as this broke down, we can see that this would have been a 5.7% move on spot. So anybody that is trading leverage, whether it's, even very minimal leverage, if anybody does have the insane desire to be very risky in these markets, I do not recommend it, but you need to practice healthy risk management. And like this, you could have 3x shorted, scalp traded this. That would have been a 15% move in the matter of, of about a little over a day. Now, with this, here's the strategy here. The short on this would have been, the stop loss would have been, we come over here to the short position. We put it right on this line, actually right below this. And the stop loss would have been just above this candle body, just above the top. Come on. There we go. Just above the top of this candle body, right about right there. And there would be two targets minimum on this trade. One would be this level right here, because we can see this is a previous level high, and we can see, look at this. So we would have taken profit. If you're doing only two take profits, exits of this short trade, one would have been in this region of this previous high right here, and that would have given us this is a 3%. So if on a 3x leverage trade, that would have been a 9% move, right? I mean, look at this ratio here is incredible, 6.39. So I mean, the odds are stacked in the favor on this one. So you take about half the position here in profit, and then you let the rest of it ride all the way down to there. And that is a 11.4 basically risk to reward ratio here. So this is how you can dominate this. Now, the emotional traders on this, essentially what they did was they pushed this past the liquidation point. We see all these longs liquidated. We get a W pattern right here. See this? Boom, 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 boom. So we know this was likely reversing to the upside. This gets everybody to go long again. This eats all these people that committed to going short. So they wash people out in both directions. Now they get people committed to going long again, only to then wash us out again to the downside. So to me, this is essentially, this is washout. They're washing out. This is healthy movement within the market, because they are washing out the over leveraged positions. They're trying to get people to stop trading with all this risk, so we can have healthy movement within the price action. So the question is the price action going to continue down from here, or is it going to go, or is this a washout? And we're going to see a very strong potential, even short squeeze. Now that we're committing people down at these levels, we're committing people to go short, even though we're at these levels of support. Is this going to find support, consolidate a little bit, have an attempt to the upside? Where is my brush? Have an attempt to the upside up here, get a little rejection, come up here, get rejected, and continue up like this. Or are we going to go down to $25,000? Well, let's go through some of the charts, some of the things that we wanted to talk about today. Let's first close the poll, see what you guys say. So 54% of you think there's a continuation move and test down to 25K. So 54% of you are a bit bearish. That's interesting. Shout out Matt C. How you doing, my friend? Elliot Locke. Hope everything's going well with you. GS, I love seeing so many familiar names. Some of y'all's names, I've only been doing this stream here at BitLab. We started this stream middle into January. We're already over 6,000, up to about 6,400 followers. I won't call them followers. We have a community of about 6,400, and I mean it. This is a great community that we have here. If you have not joined and this is your first time, welcome to this show. Hit that like button. Really join the community. Subscribe. ding the bell. We got a lot of stuff coming, but I've been involved in the sort of YouTube space and been somewhat of a public profile for about 2 years now. Used to be over with the Crypto Jeb family. And, that sort of, everybody was sort of going on different paths. All of us are still friends, but I'm seeing a lot of names in here that I've been seeing for the last 2 years. So I really appreciate everybody being involved. Now, what do we want to talk about today? We're talking about these targets. Let's bring it back to what's going on. Let's give a little bit of a narrative to what's going on with the price action, so we can identify the probability of of where the target's going to be bullish or bearish targets, and which one's more likely. So we see today, Thursday, April 20th. And if you're watching this at any point in the future, this content, I do this so you can watch this, you can see the process of going through what the different steps are and the tools you can use and how to use them. So you can watch this at any time. Comment down below also if you're not watching live. Any of the questions I ask, we go back through and read these comments so we can fit the content to y'all, to all of you all here watching. So unemployment claims are up. This is actually good for what Jerome Powell and the FOMC meeting and the monetary policy. The fact that this is going up is bringing things in line with the Fed potentially coming to a pause sometime soon. Now, on the caveat of that, when you have unemployment going up, you also have to understand that means there's going to be down the line, whether it's not going to be immediately, but sometime in the next 2 to 4 months, as unemployment goes up, there's also going to be less liquidity in the U.S. economy. Therefore, there's going to be less risk appetite. So if there's less risk appetite, then that means that there's not going to be as much money flowing into what people, this is a key point here. There's going to be less capital flowing into what people deem or think of as a risk asset. The funny thing here is I want everybody to realize, my dad will appreciate me saying this. Now, while a trader may be trading this volatility to the upside and the downside, all of us that are here involved with crypto and Bitcoin and understanding these crypto, looking to understand these crypto ecosystems better, we need to understand a key point. Let me pull up this chart. Let me see where this is at. First off, we don't want to do our TA like this, right? We want to have clear ideas of what's going on, but that's just a funny thing there. What's his name? Didi yesterday, and special shout out to Didi coming on yesterday. It's such great content he shared. The thing that we need to realize is this right here when we're thinking about risk assets in the market. Now, again, I want everybody to, for a second, moment of silence for education here. Look at this chart and really burn it into your brain. And I want you to put in chat why this is important when we're thinking about capital flow into risk. And although unemployment is going up, there's going to be less capital that leads to a less of a risk appetite. Although Bitcoin may fall or pull back because of that narrative, why is that the stupidest narrative ever? Throw your answers in chat. Now, the reason that's the stupidest consideration ever. Now, somebody, again, day trading, you may be trading the ups and downs of the nonsense of the world right now, not fully understanding the value of Bitcoin. But the truth is, this chart shows us this is the supply inflation of Bitcoin reducing over time. So Bitcoin has a programmed reduction in the amount of inflation over time. So make no mistake, Bitcoin does have inflation. That's what the mining rewards are. The mining rewards, the miners who are securing the network, all agreeing on a transparent blockchain. Every miner on the network can see it's immutable. They all agree on that. And whichever one, they're all competing to solve this massive, and the difficulty changes over time based on how many miners are on the network. That's how the speed of the network is regulated, and the security of the network and the transparency of the network is regulated. All beautiful things, but they get a reward for doing that. And that is new Bitcoin that is mined, that is printed into existence. But we can see with this growth curve is reducing over time. Bitcoin is not only having more reason to have adoption over time because there's less supply coming in, there's a reduction in inflation over time, whereas we see with fiat currencies, exponential growth over time. And so while there may be flight because of, there may be capital flight from risk assets, you know, in the interim, I mean, over the next 7 years or so, and it's going to reduce over time with Bitcoin as this narrative and understanding of Bitcoin becomes stronger. We have to understand that the flight to the US dollar is actually the stupid investment anybody can make if you're comparing it to Bitcoin. Bitcoin is the answer to the disaster that is the US economy, that is the money printing, that is inflation, because it is the antithesis of that, it is the opposite. It has a programmed reduction in inflation up into the point of the year, I think 2140, I believe is the year. So another 120 years or so, because it reduces by half every 4 years, that, you know, the 4-year cycle. All these things pertain to even the price action that we're looking at today. We have to understand the psychology of the imbeciles that are in the market right now, that are institutional and retail. You're an imbecile, I'm an imbecile, we're all imbeciles. And that's okay. We are here. BitLab Academy, daily streams. And those of you that come and get involved in bitlabacademy.com, and you get to go through all the courses that we break down specifically, you know, you get access to really understanding and walking your way out of being an imbecile in the markets. At least you get closer to not being one. And that's the goal all of us should have. We want to trade assets that have reduction in supply over time while there's an increase in demand. Why do we want that? Because that allows us to, I'm pulling something up. That allows us to be a part of something that gives us better return on our investment. That's what we want. We want better return on our investment. And the best way you can do that is by understanding supply and demand dynamics. So while unemployment is going up, there may be less capital in the interim, but that's going to present an opportunity. When there is a flight from risk assets, you may see a dip in the price action. And then from that, I just want to show you a little snippet right here. From that, this is the on-chain data analysis course in the new BitLab Academy. We can see right here, we've got, I'm going to go into the actual, we've got on-chain resources, we've got exchange, net position change, realized price, market value, and all we have, there's courses and courses and courses and quizzes for each course. We can see in here, I don't know if I'm logged in right now or not, but there's quizzes for each course. I don't know where the quizzes are. Oh, you know what? We didn't do it for this course yet. We haven't uploaded the quizzes here. But we break down everything in here so everybody can get further away from being an imbecile in the market, so that we can, I'm going to go off this page now, but we can see that although this is setting up for potential pause in the interest rate hikes, people that have looked at markets for years will tell you that the pause in interest rates does not mean there's going to be an absolute surge in markets. The worst, if a recession is to come fully with all the new definitions of it, the worst in a recession, the lowest lows happen on traditional markets after the pause comes. Why is that? Because now we're seeing the unemployment numbers that we would like to see in terms of Jerome Powell's context. We could get the pause, but this will then lead to 3 to 5 months from now having less capital available in the markets to be involved trading and trading assets. People fly to safety. They go to treasuries, bonds, mutual money market funds, CDs, the U.S. dollar. You see a strength in the U.S. dollar. And it's ridiculous, I know, because Bitcoin is the answer to all these issues, but we still have to be aware of the dynamics of the market so we can take advantage of that. Now, we got 230 people in here right now. Listen, just over half of you all have liked. Hit that like button. Let YouTube know you like this content. We're doing some great giveaways tomorrow, so go and share that tweet if you haven't yet over here at BitLab Academy. We got 42 retweets, so that's good. You're going to be entered to win some great stuff, and also an opportunity to win $100 Yes, that's right. For those of you that will be watching the stream tomorrow. Now, let's go through a bunch more of these charts. The U.S. dollar, has slipped, has dipped in recent days, and is suggestive of a cyclical peak. Well, if we come over here to the dollar, we can see that we did. I'm going to bring this up large. We can see that we did. What were we talking about earlier? High and then lower high. We had a bit of a sideways kind of triple top here. Very, we're getting lower highs, lower highs, lower highs. Now here we had an attempt up. Previous high, previous low right here is exactly where we got rejected. Broken down, can't remember. Yeah, multi-year structure here. And we broke this level of support, and now we're coming back up and testing it. This is looking weak. Could it get a resurgence? Yes. Resurgence, yes, but it is looking weak. Dow Jones Dow Jones opened a gap lower and now trying to close that gap. Is it going to continue up? We don't know. But there is some weakness in the markets, and this is emphasized more clearly. I'm going to bring this all the way over here. This is emphasized more clearly by looking at this right here. Tesla had basically their earnings reports and their lack of sort of cash flow. They opened with a pretty large gap to the downside today, and Tesla has a major market cap. So much like if Bitcoin goes down, the entire crypto market, we saw that massive bear cycle. Well, that was, when there's a loss of confidence in Bitcoin, there's going to be little to no confidence in altcoins. And with Tesla being the large market cap that it is, opening down today is putting some downward bearish pressure on any bullish sentiment in markets right now. So we can see this, and even Bank of America, Deutsche Bank, Morgan Stanley, all of them cutting their sort of price targets or true value sort of targets for Tesla. So this is weighing on the markets. Now, we talked about the liquidations. Now, what I want to do here also is pull up CoinGlass. If you haven't gone to CoinGlass, definitely check it out. It's a free website. You get all this data right here. We break this down. This I call it market trade metrics. This is in the trading fundamentals course in BitLab Academy. All the new content. We break down open interest and funding rates and liquidations and long versus short ratio. But what I want to look at right now is come down here, come to 4-hour period. Sure, this is actually where I want to go, and I want you just to see that we had a lot of shorts liquidated here. I'm actually going to go on to a 30-minute time frame. 1 hour. What am I looking for? Okay. So we got all these longs liquidated as this came down on that crash overnight, or I don't want to call it a crash. We got to call things correctly on the pullback overnight. Now on the pullback overnight, as soon as this went down, small push up, and then, we had some shorts committed. The shorts kind of got liquidated, and we see this bit spike. Now we have price moving down, people committed to going long here with the small move. They get people to get excited again. They don't want to miss out. They have to buy the dip opportunity, but we weren't even at a key level of support. And so as this moves down, we get more long liquidations as it's coming down, and we're still kind of chopping about right here. So if we come up here, we go to the long versus short ratio. Let's see if this is committed more one way than the other. And this is on the 5 minute. So we want to look at this. Let's look on the 15 minute, and we can see this was about when the pullback started, was somewhere around here, and you can see this was 58% longs, 59%, almost 60% longs. When you have that disproportion of the number of people going long, and there's a lot of leverage involved, it's very easy to tip the scales in the other direction, because if the majority is long, the market will hurt the most people at any given time. So when everybody gets really happy and really excited and everybody's going long, the market's going to reverse, because it's going to take advantage of that blindness in the market. So we see that coming. And then when this breaks down and we got down to that level, and now, the majority, we can see, how do I know the majority is, if I could show right here, shorts, 53% now going short. And we can see as soon as 53% were going short, price action pushed up. This is a price action right here. So then the price action pushes up, and it's just crazy how the majority is usually wrong. So continuing on here, I want to continue on to This is one of the things. So we had the EU Parliament vote to regulate crypto. This could be bullish in the long run. We need more regulation, and we can even see right here. CZ Binance says, going in full screen here, says the European Parliament voted for MiCA to be implemented. This means one of the world's largest markets is introducing tailored regulations for crypto to protect users and support innovation. This is something that we need to harness. We need to get regulation that's in place that is done by people that understand crypto, that supports this innovation, especially in the US. The fine details will matter, but overall, we think this is a pragmatic solution to the challenges we collectively face. There are now clear rules of the game for crypto exchanges to operate in the European Union. We're ready to make adjustments to our business over the next 12 to 18 months to be in position for full compliance. Now, one of the things I want you to realize is this, the vote to regulate crypto, when people sell off this sort of news is kind of ridiculous because some of these new regulations and new provisions that are coming in are not going to be coming into law until as early as July, but a lot of them will be up to 12 to 18 months out for them to come and take effect. So there's a lot of runway here for these things to take place. Now, moving on further, I want to have plenty of time to go through the charts. We talked about Coinbase moving off. That's one of the things that's because we don't have regulation. Now, looking at this, we do have global liquidity. The U.S. has been pulling back, but the rest of the world, China and Japan, the eastern parts of the world are expanding their balance sheets. They're opening up the gateways for digital assets and crypto, while the U.S. is basically just dragging its feet. And they even mentioned this for anybody that saw any of the or multiple of the clips of the Gary Gensler congressional hearing. If you watch the whole thing, if you watch any of it, throw a one in chat if you watch that. Let me know you guys are actively participating in this space. But I even shared a couple clips on my Twitter the other day. The 5-minute segment with Tom Emmer. I mean, it's a perfect exposition of how just off the ball, off the path that Gary Gensler is. But one of the things I'm tying this back to the global liquidity is the fact that the U.S. dragging its feet on regulation and basically trying to squash the crypto and digital asset marketplace because they're threatened by it. Central banks, I really think it comes down to Gary Gensler not even being a dumb guy. I think it really comes down to him being pressured by central banks and the DNC and many other things outside of that. I think that has more to do with it. But China and the Eastern world, they're gunning for larger global economic sort of prowess. And, they're seeing the foot dragging that's happening in the U.S. And so they open up the regulation and allow people to own digital assets. They're pumping up their economy. I believe, I can't remember who posted it, but they had one of the largest increases in GDP year over year in many decades, if not ever. And because China, the economy is opening back up. They're buying cars. They're buying digital assets. The government is buying stuff. They're pumping up their balance sheets. This is a national security threat for the European Union and for the U.S. If we don't get our eyes on the future rather than these politicians trying to protect their ability to be reelected and not having any freaking understanding of what's going on with crypto. They're worried about transparency. We're worried about transparency. We don't know what the hell you're doing with all this money printing and all this black, crossed out spending that we're not allowed to see. These trillions of dollars. It's ridiculous. And they're worried about transparency. If they're worried about transparency, they would get the government on the blockchain because the blockchain is transparent. They'd be able to understand on-chain data, which, yes, there are paid services for on-chain data like Glassnode and CryptoQuant and Santiment, and they're great. They're up to the minute. But there's also a ton of free. You can look at the entire blockchain, Bitcoin, Ethereum. There's plenty of blockchains you can look at all this on-chain data about and see where transactions are happening, what wallet size. You can look at specific wallet address, everything, every transaction a wallet has ever made, everywhere any portion of a Bitcoin, 0.01% has ever been. is permanently on the blockchain. That's why they're threatened by it. One, it's a better asset than the US dollar or any fiat currency. And two, it's transparent. That's the ultimate threat. But one of the things I think is going to be incredibly beneficial for Bitcoin is all this congressional hearing that we had this last week and the complete failure from Gary Gensler that was on complete display there is the fact that this is now becoming a national security threat. And if one thing kicks our country into gear, the US, it's military and national security. Okay. I mean, unfortunately, that's just the case. And if us not having not just regulations in place, but regulations that help support the US being able to participate in Bitcoin and blockchain and digital assets in a meaningful way on the global stage, if we're not able to do that, let me say that again. If the US does not get its act in gear to support innovation and have some regulatory framework and guidelines, because we do need that at some level, especially for institutional adoption, especially for the mom and pop, foray into crypto. We need to have regulation, but we need to have it in a way that supports innovation and encourages innovation here on our shores. Because can the digital asset sector, crypto, Bitcoin, blockchain, can it succeed without the US? Absolutely, it can. I think it will be much slower if the U.S. is not involved, because if the U.S. has regulation that completely drives down the adoption of the U.S. populace, then it's going to make the global adoption much slower, because there's going to be less liquidity and there's just going to be a lot of tit for tat going on there. If the U.S. supports adoption and supports and encourages innovation, then we can also be a part of this global movement. And also, if you really think about it, aside from the national security threat, it also allows us to be part of the global citizenry. So we need to get our act in gear. Now, let's go ahead. Let's dive into these charts. Throw in those coins. I already see a couple from my mods here. Throw some coins in chat. We're going to be getting into these, but we're going to, as you guys are throwing the coins in chat, let me know what you want to see. Let me know also if you have any sticking points. Also, if there's any super chats, I'm going to be turning off. Once we start getting a few more super chats on here, I'm going to be turning off the monetization on this channel so that we can have this without interruption of ads. But, on the one hand, we all have to pay our rent, and I'm here doing this all the time. So that's why we either have to monetize it with ads, or we need to. So if there's any super chats, I'll absolutely answer any questions you have. If there's a specific coin you want to look at, no spamming of personal projects or anything like that. But let me know, mods, in the DM here if there are. So everybody hit that like button, hit that subscribe button, ding that bell. Let's keep this growing. Let's keep this channel growing. If you're watching anywhere else, make sure you come over and visit youtube.com/@BitLab Academy. This is our page. We're up to 6,370. Now, we're going to look at some of these charts and see what we're going to talk about with targets. Now, total, this is the entire crypto ecosystem. We are on key support. So this is previous price action high resistance. This is a pretty important level as it looks right here, at least on this chart, but this is only a 2-hour chart. So this means that if we don't hold here, we may be retesting, this low down here or this low here, or even a previous high, but we're going to look more specifically at these price action targets. Now, Bitcoin broke out of the ascending wedge. And now we talk about this, we break this down in the candle patterns course in BitLab Academy, but I'll break it down for you here as well. Ascending wedges are these wedges that we have that are basically, they're wider at the open at the beginning, and they get tighter. They constrict tighter and tighter and tighter. So support is constricting while the resistance is constricting as well. We're getting that sort of, it's like you get what I'm saying. I'm having a little bit of a brain fart because I didn't have my coffee this morning. But this is wider at the beginning, is constricting. These pointing to the upside tend to break to the downside. Ascending wedges like this would be a bear flag or a bear pennant rising wedge, where we had the price action coming into it, and then we have this bullish impulse, and then a weak bearish impulse, weaker bullish impulse, weak bearish impulse, weaker bullish impulse, and initially break out to the downside. Essentially, we have this rising wedge right here. I had not even seen this on the chart. So there's this other sort of symmetrical triangle that we had, but now that this sort of broke past that, we have a larger pattern, which is this ascending wedge, which we have broken out to the downside. Now, there are a lot of fake outs in this market, and so we need to see what's going on with the broader picture. Now, is something larger forming on the, on the 4 hour? Are we forming a bearish falling or descending triangle, meaning we have descending support and this descending resistance, my apologies, and flat support? This is something that could be brewing. So we need to look at this on the charts. Now, we don't need to look at that or this right now. We're gonna jump right into the charts. I do want to point out though, right here, this is lookintobitcoin.com, free website. Come over here to charts. Look at all these free charts you can get. So if you don't have a paid membership somewhere for any of those other ones, you can start with the free content here. Now, some of this is delayed a week. But when we're looking at on-chain data, a lot of it is giving us a more broader concept of what's happening in the market. And when we look at this rainbow chart here, this is essentially like a logarithmic growth curve. We can see that these areas of blue have been great areas of accumulation. Even after the bull market started, the bull trend started, anywhere in this entire region, you still had huge upside afterwards. This tipped down right on top of this zone. This dipped all the way into it. We've been at this zone in this whole region we're still very early in the cycle. You've not missed anything out. You don't ever think you've missed something in a cycle. Wait for the price to revisit a level that you set from a strategy. Now, coming over here, we're going to dive right into these charts. Now, I don't know what, I see some of the charts you guys have. So now looking here, we're gonna give our sort of final statement on Bitcoin. What we're looking at, we had our descending wedge. We broke out positive. We have retest. Now on this sort of zone here, I'm gonna delete this. First off, delete the paintbrush. Come over here. Okay. Now, what we want to do here is let's sort of draw that ascending wedge that they had. This was, I'm gonna do two different formations here. So we have this option T. My nose is itching. It's almost like an ascending triangle. Oh, sorry, ascending channel, I meant to say. So we've got this sort of structure right here. This broke down. This is at this level. Let's go ahead and bring up our momentum and strength indicators. We're going to go ahead and pull up just a chart here. Now, we have to take in all the data. Even though we do it on a daily basis, we've got to take in all the data. Now, we were overheated here on the 3-day, on the relative extrema, okay? Now, looking at the BitLab Market Intelligence, are we on the 3? Let me make sure we're on, okay. So we had some bearish divergences back here, and this is overheated all the way this entire move. So once we got the bearish divergences kind of led this move, and this was continuing on, and we have this continued overheated zone. Once we got this, these sticking out to the upside, this is showing unhealthy. It's almost like whack-a-mole. The mole is poking his head out. It's likely that there's going to be a hammer coming down with price action. This is not healthy. It's likely to come down. So we see this leading, sustained signal, and then the actual signal. This is on the 3-day chart. And we also see it with the price action rolling over. So we're getting multiple points of confluence. The price action was actually going to come back. We found support there. Now coming down to, let's go to the 12-hour. Now on the 12-hour, look at that. We got two bearish divergences right at this peak. So this poked up. We're overheated here. Now on the 12-hour, we didn't get a very clear signal because we didn't get an additional. We only have these two, and then we have this overheated zone. But we could see this was pulling back, and this move, and I pointed this out yesterday, was looking a little. This was looking a little unhealthy right here. And look at this slingshot. Boom, slingshot to the upside. Then we get basically hanging man right here, which is it's almost like a hanging man doji candle. A very, very slim body and a large attempt to the downside to try and attempt back up. A little attempt to the upside, came back down. This is a likely reversal signal, especially on this 3 candle move. This is also called an evening star doji, okay, where you have a large green candle, then you have this doji candle here, and then you have this large bearish candle. This is also engulfs this entire candle. So this indicates that this likely was going to continue down from here. Now, on this move right here, we're not getting as outlandishly out of this is not looking as unhealthy on this down move, but we are getting a little bit of these candles sticking out, and this is neutral now. So what I'd like to see is this to flip blue, but we are getting a bearish divergence. A bullish divergence. These flags on the bottom are bullish. The flags on the top are bearish. That's how we determine. So this is a bullish divergence coming into support. So let's go down to a smaller time frame. We're also on this large volume node that we saw. 4 bullish divergences, high volume. We're sitting right here. 2 levels of support. So we are looking a little better right here. If this level is lost, this is what we want to look at. This is what we want to look at. The target from here, if this zone is lost, I should say, this box right here, if this zone right here is lost, then what we would want to do is look at what the next levels are. The next level down would be, boom, option J, this high right here, which, okay. Now, what we're going to do as well, we're going to delete this fib. And we're going to take a fib from... We're going to take a fib from this low, option F, to the top there. And we can see that we've got a golden pocket all the way down here, about $23,800, $23,900, $24,000. And remember what I was talking about the other day when I was bringing up where the short-term holder realized price likely was. And my sort of line in the sand for bullish movement, this bullish position that we're in, bullish structure, I should say, is that we hold above the short-term holder realized price. And that's because if I turn off everything else, let's long-term, generational, let's turn off all this, I'm giving you context as to why it's important. Let's look at bull control. So this line, no, not where we're at. This line right here. See this purple line? Short-term holder realized price. Once we break above it, we got a little bit of a fake out here, but once we lost it, okay, a little more accumulation. Once we lose it here, it's rejection, a long downtrend, but we're not towards the beginning of a bear market. We're somewhere in this region here. We're either going to, we've already tested above this, you see here, but we've tested this short-term holder realized price. Are we going to test it again and break below it, or continue higher? I think that unless we get some sort of very bad news or very bad, government squashing of digital asset or something, I think that this is a very healthy line in the sand to be looking at. Short-term holder realized price right now, as of 3 days ago, was 23,400. The day before that was 200. So it's going up about 200 every day. So 200, let's do 150 times 3 is 450. So $450 up from what is short-term. So 2 days ago, 23.5. So it's about 23.6, 23.7 now is what I would say where the short-term holder realized price is. And so that would put us right about where, perfectly where this golden pocket is. So we could realistically, if we lose this level, and we're not able to hold this 382 or this zone here for 25, basically 25,600 level. If we cannot hold in anywhere in this region, then I want price, and I will be a buyer at this zone right here, anywhere from 24 down to looking at the momentum of the price action. Now, with the price action falling as it stands right now, looking at where we're at, I can see that we have 4 bullish divergences. We have this major level right here. If this price action falls down, I will be buying at 27,252 because this is major support as well. And if we lose this level, I'm just going to be adding to positions down in this level at 24.9 up to, I'm going to be laddering in my positions here. I think there is a potential that we are setting up for a washout wick down and then sort of a push to the upside. And the targets we've mentioned before have been, we have them all mapped out here. 32, 146, 30, basically 34,000 would be my next 2 targets above. But we've been talking a lot about Bitcoin. Let's get into some of our alts. I see AVAX, ICP, Filecoin, are some of the ones that that the mods. That was yesterday. So AVAX, Phil. I did ICP yesterday. So let's go ahead and do the ones that we're looking at here. We'll do Avalanche. A lot of these are going to be following the leader here. Remember, I showed you that broadening wedge. Broadening wedges, much like ascending wedges to the upside, tend to break out bearish. I showed this to you. I think I showed this to you all 2 days ago, and we've broken below this. And we've broken below this. Now the question is, we've got this this move from. Let's go ahead and delete this. Let's start this over. We've got this broadening wedge. Let's take this move, Option F, from this low to this high. This is a high right here. We've broken down. Look at this. Found support directly on the golden pocket. How many of you all use Fibonacci's in your trading strategy? Let me know in chat right now. I'm going to wait about 5 seconds for you guys to let me know. Because you've seen on this channel how effective. Now, it's not going to be something you use on its own, standalone, by its own accord. You're going to need to use Fibonacci's with understanding candle patterns and price action, as well as looking at your other momentum indicators. Whether you're using the full BitLab trading stack. By the way, if you like this, the trading stack that reads for you all of these different divergences. It reads your the on balance volume divergence, money flow divergence, money flow index divergence, MACD divergence, stochastic divergence, relative strength index divergences. So you don't have to have all those up. You can see the divergences on the chart. That's what these flags are. It reads you and it tells you how many are, and we can have. I have it as show only last, because otherwise you get a bunch of different charts. You get them all over the chart. You see, and when you get many different divergences, look at this: 3 divergences coupled with this relative extremist sticking to the downside, moonshot, boom. We get a strong price action. Now we get 3 bearish divergences, and this is overheated. We're seeing the formations of a likely cycle top, and we get the relative extremist poking out right there. Boom, signal for you to take the short. We have all these. I'm filming all new strategy courses for the BitLab trading stack as well, and there's a lot of updates that are coming to this full stack with the relative extrema being included. Some of these signals, when these are sticking out, it's going to be included in the price action on the chart, as well as some color changes, so you can see the momentum, aggregate momentum, and health wave that we have here, and it's some other signals and some buy and sell signals. But I want to emphasize with everybody, buy and sell signals on any indicator are a suggestion of something, of some signal in the underlying chart. The best buy and sell signal you can ever have on any indicator is using that. If there's a buy signal that's flashing on a chart, that means that there's a historically regular sort of crossing of some key levels and some key data points in the chart that is suggesting this could be an opportunity to buy or sell, or long or short. But with the caveat of that, it's also important to only take those with, what do I say in this chart, in this channel all the time? You don't ever take one indicator and or one data point and make a buy or a sell trade signal. Decision off of that. For instance, on these indicators, each one of these indicators is already confluent with. If this is overheated, this is saying that there are at least 3. In this case, there are 3 or 4 different momentum indicators that are saying it's very overbought, it's very overheated. This is reading a number of different indicators. So this showing the bars sticking outside of the cloud is a confluence of multiple indicators saying this is likely an unhealthy move. You're coming to a trend cycle low, and then we get that trend cycle low blue wave here. So one that's already multiple confluences within this indicator, and then 2, which is already multiple confluences as well. So now we're getting multiple confluences followed by our final signal. In this case, we get the bearish, the bullish divergence here and the trend cycle low. This was a clear buy signal on this pullback. Now, we understand that some people are at different levels of their journeys, and you need to start from more basic beginnings. So we're building in a lot of very beginner-friendly features in the BitLab trading stack. So be looking out for those. Now, on Avalanche, we came down from this local move, low to the high. We come over here. If you don't like using quick keys, you come over here, press this little button, go to fib retracement. You can put a star on it if you like. Then it will be on your favorites bar right here. And what you do is you just come over here. Sometimes we got to break the basics down again, everybody. Just stick with me. We got to bring the beginners along so people trade smartly, so they make a lot of money. So they are a good indication for their family and friends that they should be involved in this market also. So you draw from the low of this move to the high of this move. From the low to the high gets you the retracement down. From the high, like this, we can do another one. From the high, Option F or Alt F gives you the fib as well. To the low, from the high to the low gives you the likely bounce target up. That's a relief push. Now, if this came all the way down to this golden pocket, if this is able to hold this and push up, the two levels I'm watching is the lows right here, about 20.27, and then up to $20.50, because this is a golden pocket retracement to the upside. Price action is like dropping a tennis ball. If you drop it 100 times, it's going to typically bounce about to that level. That's just the psychological nature of markets. So this is looking a little bullish. We're on the 4 hour. Let's look on the 1 hour. Okay, we're getting the blue signals flashing, but then they're going away. And this is making lower highs, and this is looking like this is sticking out a little bit of this made a little bit of a higher high. If this is able to round out and continue higher, then we can potentially look at this target at 1983. We're on the 1 hour chart. You see how the levels change when you look at different time frames. Now, this is looking very choppy. So what I would do here is do Option T. Also, what you can do is come here. If you have it on your bar here, come over here. You can put a little star, and then on your little favorites star right here, find this little window. And then if you don't like using the quick keys, you can come here. We can see, do we have a trend line? Let's see. This is very not legible. Let's go ahead like that. Okay. Is there a trend line there? Well, we do have 2 points. Is it connecting anywhere in the past? Yeah. So this is, you see this? This is how we got some validity there. So if this is not if this is not able to take this line, this resistance, then this is likely going to see lower targets. And the lower targets, let's go ahead and double click on anybody that has BitLab Trading Stack. You can double click on these flags, bring up the settings. For anybody that wants settings like mine, I do 7,490 right here on the pivot look back, all this, but I also like to do show only last divergence. This will, it'll clean up the chart. You see that? Now, this is looking a little weak. Now, if we come down on the 24 minute, I mean, yeah, this is dominated by blue, meaning likely bounces. And now we can see this is flipping to mostly red. I'm looking for probably another attempt at this low here. If we lose this low, Option J, if we lose this low at 1869, 1870, with candle body close, this is on the 24 minute. If we lose 1870, then I think that we are probably going to continue down. In this case, if we look here, let's go back to the 1 hour chart. Let's go ahead and mute this so we can turn off the high-low pivots. We got a lot of volume. We got a lot of volume here. This region right here, Option J, 1768, between 768 and 1820. I'm leaning, these are the highs, Option J. Yeah, I'm looking at a test of around 1770 to $18 is likely if we lose this level and continue down. Now this is Avalanche. So let's come over here. Let's look at Filecoin. They said, okay, let's come over to Filecoin. My nose is itching today. Filecoin, boom. Now Filecoin, I have a bit of Filecoin, and I'm thinking about potentially even diversifying into getting some Arweave as well, because I was looking at the tokenomics of Arweave and some of the different things, and you know, sometimes it's good to diversify even within the same. If you have one layer one, you know, you can diversify and get two in case one gets hit with a massive lawsuit against it, or if there's an issue with a bridge hack or something like that. Same thing with Filecoin, two different decentralized storage plays. Now in this case, I'm going to go ahead and delete this. We're going to do from this move right here, Option F, down to the low. And look at this, same thing. Now that's on the 3 day. Coming here on the 2 hour, I'm going to go to auto. I did this from the low to this high. Look at this. We pushed right into the golden pocket, got rejected down, and we're trying to move to the downside. Now, in this case, I feel like there's a bit of a important region here because we did essentially, come on, TradingView. We did essentially have this low here not so long ago. When we broke out of this massive downtrend resistance. So what I want to see here with Filecoin is that this level right here is critical, option J. If we're not able to hold $4.85, $4.90, then I think this could be a very strong washout potentially to the downside. We have a bit of a region here. This is not as strong. I'm gonna make it a little bit less. So this is previous lows here, but if we lose this level, we could do a full fib from this level. Boom. Now look at that. I didn't even see this before. Now we had the Fibonacci. I'm going to make this much larger. We had this Fibonacci that we pushed up. We came up. This was a golden pocket of this local move right here. We got rejected. Now these two lines, see this greenish line, and this is a golden pocket. And I was saying this is a very important level because of this high and these lows. And essentially, if we pull back down to this level and we can't hold this golden pocket in this region, I think we may be having something else larger going on, and we could be seeing some stiff downside. I still am feeling very bullish about having a short squeeze setup that's going to be rocket fuel for a move. Will that absolutely happen? I don't know. But I'm feeling about the way that the short squeeze, the long squeeze that got all those liquidations, that wasn't people actually saying, I want to sell because I don't believe in this. That means that there was people selling because they were making sort of ill-informed. There's too many people going long and they're taking leverage. And so there's a forced selling on the way down. So that's not a healthy move. So I'm still thinking that we could have maybe another wick to the downside to scare people, but I'm thinking that there is going to be some upside action. What could that look like on Filecoin? This is for all the coins. Is it maybe a move into here, a little rejection, and then continuation up to this level right here, which is this other macro sort of level that I had identified here. Rejection. Oh, sorry, my bad. Got the charts up. My bad. Charts are up now. Is that this previous rejection, support? I mean, this kind of fell through the range of support, but it did bounce off there. And then support bounce, on this wick, we can see right here. Where's that at? You see this bounce right here? Now rejection. So I'm looking at some sort of a move. If we do bounce at any of these levels in this region, even a wick down, if we bounce, a next target to the upside would be about $9.45. Next target from there would be about $13. And then it's going to be a lot of positive movement from there, because that means markets are really moving. Next target really from there is this region, the $21 to $27 region. 27 will be somewhere we'll butt our heads up against because of previous price action highs. Now let's go over ahead and look at Algo Rand. Let's go to crypto, Algo USDT. Now looking at this, not even having anything marked on this because I'm looking in a different window. Option T, let's do it really quick. We got our trend lines right there. Now rejection. Now we're going to have a couple different lines here because we can also do option T like this. Because they're two important areas. Now, coming up here, now, boom. Now, okay, now this is looking a little similar to Filecoin, but same, but different, as they say in Thailand. Now, this is okay. So what we're seeing here, let's go ahead and pull up our indicators. Now, we had a lot of bearish divergences here. This is on the daily. See this bearish divergences on the hidden volume? I really like these. These are not used enough by everybody out there. Bearish divergences showing weakness, a bullish attempt, because we had the bearish divergence and then a lot of underlying bullish pressure. Unhealthy bearish action. Why do I say that? Relative extrema shows us. This is a bill of health. This is a sick, positively sick for the bears. likely going to cool off on bearish movement, maybe a bounce. This is a negative bill of health for the bulls, likely coming down. So when we attribute these two things, when this is to the upside, you see these negative bill of health for the bulls, we move to the downside. Negative bill of health for the bears, we move to the upside, especially when it's in confluence with what's going on with the other indicators. Now, in this case, we're getting a lot of choppiness back and forth, but we're at a key resistance right now, and we did break down. We had the bearish divergence on the RSI. I have this on shorthand. You can do this here, show indicator name, instead of, you can have don't show, which just shows a number of the divergences. You can go to shorthand or full, and that gives you what it really is. Bearish divergence on the RSI, immediately following bearish divergence on the hidden volume, and unhealthy bill of health here on the relative extrema, likely consolidation or price action moving to the downside. So we have 1, 2, 3, 4, and price action at support. That would have been a short or an exit of position if you had taken price action to the upside. Now, this is moving to the downside. This is on the daily. Let's go to the 4-hour. Looking on the 4-hour, look at this. 4 bearish divergences. We moved to the downside. This was followed by the 2 bearish divergences on hidden volume specifically, which this was the leading signal. The resistance level was a confluence. Point of confluence. This is saying things are starting to look bearish. We move into a resistance zone. Okay, you're really looking for bearish signals. You get the bearish divergence on the hidden volume. So you say, okay, well then you see the relative extrema is looking like it is sticking out. This is not healthy. So what do? We see the bearish overheated zone flash. We had our 1, 2, 3, 4 signals. We get out of this long position or take our scalp short to the downside because we had multiple points of confluence. Now, this thing also, if we look at this move, we can look from the most recent move, from this regional move. I mean, option F. There we go. Now, this is looking like we went all the way to the top. Okay, now in this case, this fell through the golden pocket here. So do we want to make sure we hold the 786? If we don't hold the 786, then we could be seeing some further downside action. Now, remember, we had that the Bittrex lawsuit from the SEC that was essentially saying that the Algorand potentially was a security because of some past comments about Algorand and stuff. So is this going to be something that lingers like the XRP case, or is all of this going to end up being dismissed? Or is Gary Gensler, there's so much going on right now. There's some bearishness in the assets, but I think there's, as potential market makers trying to, I mean, we see, look at this, bullish blue wave, relative extremists ticking out to the downside. We did have some bullish divergence on volume here, but it was only very short-lived. We really want to keep an eye on Algorand. For me, if this drops below this level, I'd be a strong buyer. However, I'm on the sidelines about it because of what's going on with everything going on with Gary Gensler in Congress. So I'd like a little bit of clarity there. I actually took some of my position out of Algorand after that news, just as a risk management move, and moved it into a couple other, split amongst a couple other altcoins that I have in my portfolio. But with that being said, I love you all. I hope you have a wonderful day. Make sure you come over to the BitLab Academy daily stream promo here on BitLab Academy's Twitter page at Academy BitLab. We're right about 2,200 followers. Like the page and come here and retweet the daily posts that we have. Each one of these, you get entered to win. Each one of these is an entry, but you have to also like the BitLab page. We will be drawing tomorrow, and there's also going to be a drawing for $100. We're giving out to one of the lucky fans that is, in the stream early. So with that being said, golly, I keep saying that. I hope you all have a wonderful day. I hope we're going to head over to watch the news over at BitBoy Crypto now, and I will talk to you in the next episode. Adios, muchachos. Thank you for coming. Thank you for always tuning in. Adios, muchachos. Thank you for being here. Hit the like button, subscribe, and be our friend. Hit that like button, sucker.